Can I get a sound check in YouTube and the Bookmap Discord Trader Lab? All right, thanks everybody. Well, good morning everyone. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time, and this stream's about integrating Bookmap Order Flow tools with auction market theory using the volume profile in the intraday developing time frame. In addition, this stream's based on structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab community, as well as a community of like-minded traders who've come together to leverage their collective experience. This process is built on a concept of gaming theory. That is that every moment in the market is random and uncertain. And if we can build out a statistically based business that over time, just like casinos, we can have the opportunity, assuming we do the work and actually have the ability and discipline to execute a vetted structured plan, just like the casinos do. They execute vetted structured games over time, even though the gamblers, or in our case, the other participants in the market, walk out with gains, that over time, if we execute an actual statistical edge, that we will extract dollars from the gamblers or the other participants. Now, whether or not that will work for you is a good reason to come and visit the Trader Lab and be in an environment of traders looking to build the business side of trading or careers. And of course, the outcome is always random, and trading is definitely not for everyone. The thing about trading is what we think it is and what it actually is quite different. And nothing we do in life probably compares to the environment of uncertainty or being in a trading environment. Psychologically, we're fairly wired, if you will, for survival, and that means avoiding risk and also so running from the saber-toothed tiger, if you will, running out of the burning building. And this is a primal wiring, and it's also maybe the most substantial obstacle to actually staying in this business. My personal belief is that anyone can learn to trade if they put the time and the effort in and surround themselves in a professional community with a serious environment, not romper room, because this is not a video game. And the thing about it is getting to a place of excellence and to be competitive in an environment with other traders who are looking to take dollars from you does require a lot of effort, tenacity, commitment, goal setting, self-management, and in reality, when you look into the monitor, you're really going to see yourself. And that's something we typically don't have to look at in the outside world because trading is its own environment. So if those are things that you're interested in or you're having issues in that area, I invite you all to come and visit Trader Lab, and there is no cost for you to visit the Bookmap Discord Trader Lab chat, as well as and take advantage of all the other education that Bookmap offers. Stocks, options, crypto, order flow, of course, with a high-tier tool like Bookmap, algorithmic behavior, market maker behavior, and a lot more, not to mention the Bookmap Academy, which offers tutoring, coaching, mentoring, and there's a lot more available to you. So much for that. Important, though, that you know what this is all about. And again, thank you for visiting the Trader Lab. And please remember, these streams are available exclusively to the Bookmap Discord Trader Lab participants for screenshots, circles, arrows, and always, everyone, if you're in the trading business, be sure you're journaling your trades and also your emotional states. The key element, assuming you can actually create a vetted, structured trade plan, is actually being able to execute it. And until you become familiar with the emotional states and living in a world of always being uncertain, you will discover things that disrupt the best intentions. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results, and please remember this is not a trade calling room. This is for educational purposes only, unless, of course, we get into something, and I will certainly share what I say with you. Grab a pen and paper. Now, all-time highs. Are we having fun yet? The other part of that is we opened today higher outside of Friday's range. That's a gap. Now, there's a couple things that can happen, and of course, remember, everything is random in all of this. Let's get over here. And by the way, please give a thumb up if you're visiting, and also be sure to subscribe to the channel to get notifications of other streams that might be going on. Hold on one second. Something is a little strange. Okay. Be sure to subscribe to the stream so you receive notifications of other events that you might find interesting, and of course to get notifications when this stream is about to begin. So this is the RTH Open. Let's just take a look at a couple of things. Yesterday's high, I'm sorry, this is, yeah, there it is, RTH Open in the Gap, ETH high. Let me just scroll down here a little bit. Give you some, these are areas you should be aware of. Yesterday's settlement, Friday's settlement, the ETH mid, these have high statistical probabilities, overnight volume point of control, and a naked volume point of control. In profile world, these represent the last fair price. So a fair price in the auction is a high volume price. Think about in the store, if you go shopping, and a retail price is what we pay if you buy something at retail. Think about it. So what happens at that price point? Buyers and sellers, your maximum volume takes place at what both sides perceive to be fair. If the price goes too high, then we might find that buyers are not going to pay it and the volume starts drying up. There's always somebody who'll pay $8 for a pint of ice cream on a Saturday night to watch the movie. But you could buy it in the store for $6, let's just say. Somebody might pay $8, but you're not getting a line out the door, if you see what I'm saying. On the other side, if that pint of ice cream is on sale for $3, everybody is going to want to buy it, but the sellers will not keep it at that price for long. So there won't be a lot of volume, and then they'll raise the price back up to retail. This is what creates rotation. So in the ETH and yesterday's RTH, this was your retail price. Settlement, high probability target. And then, of course, we have yesterday's high, the all-time high, and the gap. So a couple things we can consider. First of all, if we gap, subject to how you process this thought, the objective would be, if you get a long, is to take the long and manage it, and also understand you're out in the ether or the ozone with no reference points. In that scenario, at least for me, since I have no reference points, I'm really kind of in space. So what I do then is just manage the trade using high volume structures. The other side of that, once the market is long and we get buyers who want to get into the quote bull market, buy with abandon. And remember, and I've said this for the past several months, learn what a blow off top looks like. Study, understand that we were in a unique condition and that this condition is not a sustainable condition, and that market tops, and nobody can pick them, by the way, but the condition is familiar. If you've been trading for a while, or if you've actually a student of historical market mechanics or behavior, you'll understand that this is a phase of a market, and you will be anticipating higher volatility, which is an earmark of it, and a fight between the buyers and the sellers. Nobody's going to know where the high is, so don't focus on that, at least in my opinion. Focus on where the behavior changes, and then the buyers ultimately fail. That has not happened yet. And when it does happen, we won't know until hindsight. So Not my job to predict, just recognize condition. Remember, this stream's about market mechanics using volume profile and auction market theory. One moment, please. Got to move something. Small amount of trade management is useful. Hold on, guys. Okay, sorry. Managing a trade here, which I'll go into. So this is the RTH Open. By the way, if you have questions, please post them. There's no video on Discord, huh? Well, so much for that idea. Hold on a second, guys. One second, guys. I got to try to fix something up here. Okay, I'm sorry. We okay now? Okay, sorry about that. A little internal challenge here. Okay, so let me try to get back on track here. Just check a few things. Okay. So this is our RTH Open. Hold on. Here. So open, gap, above yesterday's high with the all-time high. Now we're looking for our first trade. So in this situation, I'm looking for a long. The possibility exists we could fill the gap first and go up or just go. So the first trade that sets up is what I call the VPOC migration trade. And as always, this is an aggressive trade. And if you don't have an edge with it, then it's a great way to learn how value shifts in real time in the sense of as it's developing, and it's very fast. So right here, we open, we have a selling iceberg. Right here is the volume. This is called the variable high volume node. Sorry, I got very distracted, guys, with this Discord thing. So I got to get my brain back in the game, as they say. Okay. So the volume, the price comes down and we have more volume here. This is the chop. Now I see the sellers here. So here's what I'm seeing. Now right here, I don't know if it's just going to come down, right? Fill the gap. So there's no way to know this. So right here, I see my sellers. So I know this is too high. Now this is microstructure. You'll see how I use this. Break high. Okay. So now this is too low. Let's just follow this. I go, what does it say? Let's look at order flow, because that's, this is kind of where the rubber meets the road. I'm using a profile for structure. I'm using Bookmap for order flow and nuance to see inside of the behavior. So this seller was absorbed. The buyers took over here. What do I know? This is too low. And since we broke above it, this is now going to be support. This is a specific structured trade in the Trader Lab. Let's look at it. VPOC migration. Now, there's another possibility here. So I have the following. Let's look at it together and narrate it. This is strictly based on auction mechanics. So if this is now resistance, this becomes support. When I break above this, it is saying, now remember, this is language, this is too low. The next area that was too high, resistance, so support, resistance, break above it. I have two locations to get long, here and here. This shifts up, too low, too low. Now right here is a Trader Lab trade. Now it's up to you whether or not you take this. This is extremely aggressive here. I've got the mid, I've got the VWAP, but I've also got this seller here, absorption, and we blew through it. So I know there was an aggressive buyer here. There's my absorption. I'm above this. So this is really my support coming down. This could be a Trader Lab long. Aggressive. You could do this if it's in your trade plan and it's vetted. Your stop needs to be under here. So is that fit your risk reward ratio? It's a couple points. Maybe, right? That's subject to your trade plan. So let's watch what happens here. So we get a long here. You would have a scale. And this is based on a two lock configuration. Now right here, now there's, and for me, this is very, very hard trade because I've got nothing. So when I'm in, because I have no reference points up here. And I typically trade, I trade based on the auction. And typically we're not at all-time highs. So usually there's other levels I can lean on. So when I'm in this scenario, it's kind of like you're spinning the roulette wheel, which of course we are in many ways, but I don't have statistics out here. I have statistics below me. I don't have statistics above me other than VPOC migration, which is a structured trading process. Now, the way I operate is I go down into fractals, and I want to show you what fractals are. This chop here creates a distribution. And this is really what it is a consolidation. When you break out of consolidation, there's a couple possibilities. You can come back and check it, which would be here. But if we move the volume higher, now this becomes a consolidation. And you can see it here. So this is now too low in the developing time frame. Now we're only in this a couple of minutes. This is now the next consolidation, high volume here. And high volume, remember the shopping experience, this is where most of the volume is done. Buyers and sellers are willing to do business. Now what happens here is if we move away from it, 1 second here. Keeping an eye on a trade here, guys. Sorry about that. Been sitting in this thing forever. Let's see. Okay. Sorry. Too low. Up here. Here's my volume here. So now I'm consolidating again. Retail price. And what have we noticed? We're moving away. We're moving away. And what am I looking for? Moving away. And now here's my high volume. I'm going to mark it for you. So it's here. So same thing, high volume, high volume, high volume, high volume. Now the yellow line is showing us the developing, it's called the developing volume point of control. All it is high volume. And for the whole day, the yellow line is showing where the highest volume is for the whole day so far. This white line is showing me where the high volume is in this fractal. It's no different than that or that, except the yellow line's doing that. But now I'm up here, and at the moment, there's 2,200 contracts traded here, but only 1,700 up here. So even though I have a consolidation and a retail price in this location, think of it like a store, for the day so far, this is where the highest volume is. So I'm actually in a fractal here. So I'm just doing the same process. I've gone down, and think of it like a Russian doll. So here's what we want to see. I want to see it go higher, of course, because I would be long. VPOC migration. Now I'm getting pretty ecstatic. Look at that. Going higher. High volume. Let's watch. Change in behavior. Right there, this thing has a problem. So what do I know? Right now, this is too high. And I have no idea. I mean, I'm going to tell you, nobody knows. If you think needing to know is a trait of avoiding risk, and trying to build your trading business on certainty, which is really what most of us are driven to by our primal wiring, avoid the saber-toothed tiger, avoid the risk. In trading, we cannot avoid the risk. So we tend to try to develop trading plans that are risk adverse. But that doesn't work. Casinos take the risk because they only trade with an edge. They don't do it the other way around and try to build games that are certain, because then the gamblers would never show up. And by the way, there is no certainty. So this is the last location where it was too low. So I know right here is where support may show up. So I have my mid and VWAP, and we know there's stops there. Now that could be a wonderful place to get long, but let's watch. Where do we come? Right there. So I see my sellers here. So where's resistance? Here, I'm going to label it. Variable high volume, no. Just watch a process. The idea of this stream is to help you understand market mechanics, how the market works, why it does what it does, and how it might at times, have some rhyme, if you will. So too high, too low, support. So my stop is under here actually, but a little under here, last place. So, and I'm thinking I'm going to be stopped out. I'm risk neutral. And then of course, all that stuff goes through your head and you go, I shoulda, right? Do you ever think I shoulda? Well, I think I shoulda all the time. And what is that? When I hear that voice in my head, I have the benefit of hindsight, which is very useful, right? No. And the other part of it is it's my emotional state, having a sense of regret and experience a loss that hasn't happened yet. I've lost favorable excursion. I have not lost anything, but my mind is already in the future. But what do I know? I know this is support. So right here, my stop's under here. So it comes down here. I've got a scale, and I'm just sort of, I don't want to even repeat what I'm saying, to myself, and then I see my buyer. And now right here, I don't see the buyer. I see the seller. What is this? This is absorption. The other thing I notice on the way down, just in case you weren't paying attention, to stop an iceberg detector, 598, those sellers were absorbed. I find that interesting. Here, I see the buyer, and don't forget, this is my support. I mean, theoretically, this could be a long, and this is your resistance. Come back down here. It's the same long if you took it here. That's your resistance. So this could be a long because of this. This is the same trade at a different location because of this. Sellers are absorbed. Icebergs. You see what's going on here? Let's use the stop an iceberg detector. Absorption. Look at the icebergs. Comes down lower. 120 sell stops come out. That would be you and me if you're not following auction principles or understand how the market works. You would just be putting your stop under the swings with most other retail traders. I don't do that. Why wouldn't I do that? Because I used to do it. And how did that work out for me? Not so good. Why? I'd end up getting picked off in that grouping of sell stops of risk-adverse retail traders. And who's on the other side? Icebergs are buying into these stops. So you see this selling, market orders, and this is an iceberg executing right in here. Absorption, north. So now now here's the thing. If you got long here, you got to scale here or here. Let's just look at it. And what's this over here? This was too high. So we have too low, we have too high, we have retail, so we have support, we have resistance, and that's resistance. And then wherever. So far, so good, guys. And now here's the other side. Selling icebergs, selling icebergs. So you need, in my opinion, to have the best tools and an understanding of what it means. Now, the thing about any tool is we don't know what will happen. Part of the joy of randomness. So we got to take certainty out of this and use tools to give us edge. It's not certainty, it's probability. Does that make sense? How we doing in YouTube? Are you guys doing okay? Please give a thumb up if you're visiting, and be sure to subscribe to the channel if you want to receive notifications on other events that you might find useful. Thumb up is good. Leave a comment also. Like to get your thoughts. So we have an opportunity for long here, opportunities for long here, opportunity for long here. These are all Trader Lab structured longs. Resistance is here. So if you got long here, you got long here, you're scaling here, you're scaling there. Microstructure there, absorption was there. Come up, get absorption again. Pull back, teeth chatter, make a new high. Looking good, Lewis, going to the moon, right? So let's look. I see absorption here, I get a pullback. I am very conflicted on the long, but I have nothing. It's very hard long for me. And I'm just telling you because I'm really someone who trades structure. And now my structure, I only have developing structure on the long side. I don't have like what I have below me, which is structured processes where I can aim for on my shorts, which I'll talk about. I am currently short, by the way. Doesn't matter. So right here, I see my buyer. I see buyers below. Looks like it's going to the moon. This is micro high volume here. Now, trade management for me is very difficult in this circumstance because I don't have targeting. So I'm trying to manage. So when I'm looking out here, I'm seeing excess here against support. I break above here. This was resistance. It is now support. And I'm very challenged in this. And I'm going, well, I got VWAP. I can anticipate potentially buyers at the mid in the VWAP. That's what I'm thinking. And I see this. Now, part of my brain is going, you should have, over here, you should have bought that or added. And the other part of my brain is going, no, this is resistance. I can't get in here. I would be getting in here. I have no interest in that because there's not enough range for me. So I come up here. I see stop sweep here. So I'm seeing a sweep. Sorry. And I have my absorption. So I know this is important. I want to get above where these sellers were active. Let me just show you who was active up here. We had this iceberg up here in this absorption. I have more icebergs selling. Buyers, 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 buyers. Micro high volume structure right here. This is now support. The way I kind of look at this is I do it in fractals. So if I know there's a seller there and I see my buyer here and I come back above, I'm pretty happy about that. Right here. So I'm above it and I'm thinking, well, that's cool. Now what? Now I want to stay above this and I would like to stay above this. Right here, I see a buy, I see selling, I see exhaustion. I got a selling iceberg. Very unclear to me. I get taken out. Okay, out, done, finito. Very, very unhappy about it in the sense of I could not read it well. Right here, it was kind of like the last hurrah right here. You could see right here, I had to get above this, and then I got taken out here. That was it. So done. So now I'm looking at it and I'm going, now what am I going to do? Well, what happened? By the way, any questions on the long? And I had a hard time with this. If you had a hard time with it, I mean, if you had a good time with it, you should tell me about it too, because I had a hard time with the trade management. Just was frustrating. When I get up into ozone like this, first of all, oxygen is important. And the other part of it is you have to, here's the thing about trading in fractals, like we do in Trader Lab. Each trader has to determine their quote time frame or fractal. Some traders are just going to put a trade on and go for example, maybe here. Other traders are going to trade to settlement. And there's a bit of mishmash in here, and you'll see it. I will show you what I did I'm on a short. I'm still on a short, actually. But I will show you what the short was. Any questions on the long here and the read and the narration of the language? In case you're visiting for the first time, I don't use any indicators. I basically, all I do, and it's really kind of simple in some ways, I guess, is I just read what goes on between the participants in the market. That's why order flow is so important. Order flow is not a red light, green light process like most of us would love to have, right? With indicators, it crosses over, you do this, it does that, whatever it does. And the thing with the indicators, I find that's quite, was for me early on in my career, and I started in 1980, indicators were just really coming into the public space, if you will. There weren't many off-floor traders at the time. Most, or certainly no day traders. Most of us at the time, I was a trend follower, put a trade on, let it hang out for a couple of weeks or a month, that kind of thing. Or when the S&Ps came in around 1982, we called them pinstripe pork bellies, and those were $500 a point, not $50. We didn't have minis back then. So I would swing trade those 2 to 3 day swings. So the whole business was different, So it was indicator based and then system based. That's kind of where I went. But what I found was, I'm trying to get my next targets out here, which is right around 19-ish, just so you know, in case you're looking at the current market. So anyway, indicators didn't work. And the thing that kept me on a path that was not sustainable was trying to fix a process that didn't have an edge. I didn't understand edge. I was trying to get something, and I did use statistics because I built systems. But the thing about statistics is when you're using backwards looking indicators and data, doing optimizations, you're always trying to fit the today into last month, maybe, or last week, subject to your time frame. And when I found that as I went down in time frame, I was really trying to do the same thing. I was optimizing. I was looking at swings, but I didn't really understand that you got to have an edge and that the outcome is random. So I was still building for certainty and when I saw things work, I thought I was on the right path and I would continue working, making them better. And let me redefine that for you. Optimizing them. And what did that do? Nothing. What it did was it showed me random outcomes, just like the gamblers who walk out with profits. They do walk out of the casino with profits. Yet what I thought was really a good setup, if you will, turned out not to have an edge. It might have, and I use an example. Imagine you have something you see that works 30% of the time. What are you going to remember about it? It works. It works. I just got to make it better. Not that it doesn't have an edge, that it works randomly. You can also throw a dart at a board or flip a coin. And this is a great exercise to do. Just do a coin toss and hit buy or sell and sim and see what happens. You're going to see the random nature of the market. Trying to get my next target here on the short. So let me talk to you. Any questions on the longs? Now I'm going to get into the short. How we doing in YouTube? I don't even know if we're still cooking here. Are we doing all right, guys? How's the audio, the stream? Are you seeing things? How we doing in YouTube? Okay, great. Please give a thumb up if you're in YouTube. Okay, let me show you the short. So now, the long is over. Too high. Right here, I'm going to label this, just so you know. It's still where the volume point of control is, so it's the highest volume. Now, when the market moves away, it doesn't mean that price. Here's the thing that's, of course, confusing and nebulous. This is the highest volume so far for the day, right here. However, if, just like in the store, if this price is too high and the buyers won't pay it anymore, the market's going to leave and then start auctioning another area. So what happens here, let me show it to you. We break down right here, 1,825 stops go off. Look at this, 5,000 buy icebergs were active in here. So what does that tell us? Well, that tells us that maybe these guys now have a problem and all the late buyers are on the hook. We have a gap to settle trade in the Trader Lab. It is a, first of all, gap, and wherever it goes, it goes. But once we have the current longs from Friday and the new longs here, write this down. The market goes up to go down, and the market goes down to go up. We don't know how far up is, and we don't know how far down is. Statistically, we have a good statistic down here. That's why I use statistics. This, you've heard of the Hail Mary pass in American football. That's where they just throw the ball and see where it lands. And hopefully in the end zone and they get a touchdown. Well, that's what this was, the Hail Mary pass. No reference point, no structured play, just a long. Now I have a structured trade coming the other way, and that's the one I really like by the sense of statistics. So let's look at this thing. Market breaks. There's your urgency. A lot of buy icebergs took the other side of this. So right here, we come up. Let's look. And this is called the low volume area. So if you think of this as a consolidation, chop, 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 and you break out of it with force, now all of these guys are on the hook, and this is low volume. What this sets up is something called outside-in trading or mean reversion. So there's two ways you can trade this. You can trade it long, of course, thinking you're going to come back here, or you can trade it short. I went on the short side, so I'm going to show you the trade. So we have mid VWAP, and this is a low volume area. Let's look at this. Too high, too low. This is the rotation, too low, retail. If we leave a consolidation, so we have this here where we left. So this little area out here is a low volume area. Out there is a low volume area. That's retail. Now let's look at the change. I break out of this volume. I now come down and take these guys out, and we're going to fill the gap, okay? So when you fill the gap, a couple possibilities. First of all, there's going to be stops under there. Hold on a second. I got to pay attention to my short. Okay, thank you. So right here, you can anticipate a bounce, and now this is your outside edge. This, so too high, this is now retail because of volume. Remember, I'm not paying that. Yeah, but it's on sale, the new retail price. In this fractal, this is now the retail price. So here's the possibilities. We can pull outside, come all the way back here. That's a possibility. Remember, we have too low, we have, and remember, support resistance. This was support. It is now resistance. There. So, and this is now potentially, well, this one can go. Let me get rid of that one. This. Here. So here, here. And then outside edge, potential to come outside. And buyers here. Let's see what it does. Right here, where do I come? Outside. Now I have possibilities. I can come back. And there's another thing, by the way. At 9 a.m., we have something called the IB30. We take out the low of the first half hour and increases the probability of taking out the low of the first hour, which happens at 9:30. There's also over a 90% probability. You have to vet these for yourself. Past performance not indicative of future results. We'll take out either the first hour high or low. Given that we failed off the high, given that we've fallen out of the upper distribution, given that I have a high probability statistic to come to settlement, or actually to get to the overnight volume point of control, which is this down here, my targeting there, just so you can make a note of this, and this is all available in Trader Lab. Remember, there's no cost to be part of the Trader Lab community. Almost an 80% probability I'm getting there. That's why I am short, and that's why that was my target. Here's the short. Watch. Outside edge. Urgency fell out. Let me see what time I put this thing on. I just want you to know. And I was sitting in it forever. Around 9:22. So I got short in here. Right in here. When it came back up. So I took the short going for the statistics below. Okay? And I thought that was a decent opportunity. So I got scaled. Now look at this. This is my high volume area in the microstructure. I'm going to put a little line on it so you can see microstructure. Let's look here. What is right here? High volume is in here. What is this? Chop, 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 chop. It's a consolidation. I got buyers here. If we don't go up here, they are absorbed. I get a seller. Sellers are here. Where's my buyers up here? I have 46 buy stops. That's probably what these guys are. Buy orders, buy stops become market orders. And up here, it's like a little double top, but I only got 4 buy stops. 46 coming up, 4. This is resistance. Here's the volume. Here's the sellers. Here's the buyers. My resistance is this high volume right there. I mark it. Break low, pull back. Now I'm already sitting here. So, and my stop's out above here. Notice where we come. This is mean reversion. This is a structured trade. And this is a trigger in the Bookmap Discord Trader Lab. If you're in the Trader Lab community, guys, your job is to understand always what the language of the market. No indicators. Why no indicators? They conflict. They're inconsistent. And if I understand how the market works, I can get an edge over other traders who are indicator-based and using lagging, conflicting indicators. This is my, quote, indication of participant behavior. This is what indicators reflect, except they're price-based. They're not auction-based. They don't understand. They don't have any reference to the point that we fell out of a distribution, which is material. And we come back and check. This is a short. If I wasn't short in here, I'd be short here. But I never know. So subject to your trade plan, you'd be looking here. So let's assume you see this, you see your seller. Notice a change in behavior. We come back and I have my statistics open. I have not hit my targets yet. This is a very juicy trade. Short. This is a variable high volume node. you might want to have your stop above mid and VWAP, not here, but a little further out. Or if you're a little more risk adverse, your stop is here, same place, because you're leaning against this structure. See the trade? This was, for me, a scale, and my target was this. And why, you ask? I know you wrote this down. Almost 80% probability I'll get there. Now, why does the market come here? This is the highest volume price from the ETH. In other words, retail, fractal, think Russian doll. From Friday, this is the highest retail price. So Friday, this is where the buyers and sellers did their thing, highest volume. ETH, most recent auction, right there. What does it say? This is a fair price. If I come too high and I get an unfair price in different fractals and time frames, I can leave an unfair price in a shorter time frame, check another price in a slightly higher time frame. If this price becomes too high and that price is too high in a shorter time frame, guys, it's confusing. Think Russian dolls. You guys think of multiple time frames. This is multiple time frames, but no clock. The time is the time it takes for participants to auction, not the clock. This is too high, too high, too high, breakdown, microstructure, break below, come back too high. See the fractals? Break, come back too high. Seller, come back. What's too high? This is now too high. Watch. This is the target. This is the target. My trade is done. I am flat, and it only took from wherever. I think it was here. Yeah, something over here somewhere to there. That's the short. Any questions? Can you see the short? Costello, there's gap to settle, and then there's just the yesterday's high. For me, gap to settle is a target, but I'll tell you what supersedes all that is that and that, because the auction is the ultimate truth of the market. That's why we have a market. What is this thing worth? I mean, that's a great question. Who knows? So if we know we don't know, then what benchmarks do we have? For me, and this is because what is the function or the basic fundamental aspect of the market is to try to figure out what it's worth. A product, doesn't matter what it is. If a price is too high in any product, whether it's in the store or in the market, S&P, NASDAQ, or pork belly, you should try trading pork bellies. I think the NASDAQ is based on pork bellies. They trade the same. It's all the same. What's too high, what's too low? The variables, of course, are volatility and other elements. But the auction, the purpose of the market is to figure out what's too low. If this price is too low, this could be along right here. I'm not calling trades. This can be along here to come back to the mid, the VWAP, and to here. Not a trade, just saying. And there, where's the IB? I forgot. And here, actually. So the possibility is from here back to the last location that was too high, which is this microstructure. And you guys can just watch this. It's not a trade recommendation. Let's see. If we're trading volume, if this is too high, then what we want to try to figure out is what might be too low. I'm going to put a line. Now, this is not a trade recommendation. I'm only here to help you understand market mechanics. Then you craft, based on your understanding and where you can determine there's an edge, whether or not you participate. Here. There's the volume. There's the alignment. This might be something to observe. And it's not a trade recommendation. Absolutely. By the way, when we talk about taking losses and stops, everybody raise your hand if you take stops. Okay. Let me see them. All right, now everybody put their hand down. That's what we do to protect our account. This is a area to observe, and it might, subject to your trade plan, be along in the trader lab. You have to be looking at this structure and think about, where's my resistance? You have micro volume there, but the bigger volume is here. Let's watch this. Is this along in the trader lab, you ask? And I'm going to say, is it along in your trade plan? And it's not a trade recommendation. Let's watch it. Um, let's see here. Yeah, Kyle, you're saying it's a tough trade to hold. I don't know which one you're talking about. The long? Um, are you referring to the short or the long or what? But I'm not sure which trade you meant there. Maybe you clarify that for me. So for me, I'm basically done at the moment. Uh, I don't have a trade. So, but this is an area to observe right here. Let's see what it does. Hold on one second. I got to move some other stuff around. Now that's microstructure. Let's look at the minutia. And the thing to understand about trading is it's your time frame, your fractal, your risk management, your edge. There may be no edge here, but this is where this trade would fail. We have absorption here. Sell stops came out. We have stop divergence over here. So this is an important area. This is where this is your support. Now, we come ripping through here. We just come ripping through. It doesn't really matter. In fact, you have to really kind of, in trading, you really have to kind of disconnect from what matters. I think the only way you can measure yourself in trading, at least what I've found, is did you follow your plan? Uh, we are in a world of uncertainty. There is no certainty, and everything is random. The trades that work, even with an edge, one day, take the same trade, take two stops on it, and you're going, what the heck? That's where statistics come in. If you have statistics, you now have tangibility. If you're acting randomly in a random environment with various indicators that are random, that's a problem, in my opinion. I don't think you have long in business. You might be the exception, but based on what I've observed, going on 45 years of trading, I will say that that doesn't usually turn out too well. And I'm sure there's exceptions. I haven't met them, and it might not be realistic to think that you will be the exception. Funny how we all think we'll be the exception. But there's a certain component to this business, and that is it is a gaming business, not a certainty business. So like here, there is no certainty that this just won't rip through and keep going, right? But this is structure. So how do you deal with the uncertainty? Do you say, well, where's the right place to trade? Is it here? Well, we already took out the overnight high. There's a pot, and I didn't put it on the chart here. This is an important level that we tested in the ETH. If you guys look at the ETH, you will know why the overnight low was an important level. It is, actually, let me transfer this off of my trading book map. Fun facts to know and tell. 56.10 quarter is an important level in the yesterday's RTH. Do you guys know why? Why is this important? It's from Friday. We tested it in the ETH. Currently, it is suggesting this is too low. That's why we potentially rejected it. We know this is the retail price. That's why it was a target. If we stay above here, and the market can do anything, remember, and this is now too low, because this was the retail price, we have the potential then to rotate. So we'll see what it does. So this sets up a potential long, and it's not a trade, recommendation. Your stop would be right under here. It's, to me, workable. We got to clear this selling right here, iceberg. So here's another way to look at the order flow and the iceberg behavior. If I see a selling iceberg and I see the buyers here got absorbed, I need to see, can we clear this selling? Do I have enough buying pressure to come above these where this selling was? Can the buyers absorb this? Or are the sellers, you see it? The sellers, there's more selling, there is appetite for buying. So we're going to have to watch this. Either way, I know right here is where these sellers were absorbed. So I want to stay. If this is going to work, it's got to clear that, and the stop needs to be under here, usually by about 2 ticks. Not there. Give it a couple ticks. I can't tell you how many times I've been cute. I put my stop there, and it comes down 1 or 2 ticks, takes me out, and then off it goes. So I always, and these are not recommendations, you have to vet them. So we'll see what it does. I'm still seeing the sellers. These buyers got absorbed. If I can't get above this, the trade's going to fail. So we'll see. Any questions? This is microstructure. And you have to know. Now, here's why this might have some potential. It's only because of this and because of this. So this creates potential. That's why. So there's more to this than just a line on the chart. Trading is very much like real estate. Location, location, location. Location. And this is what happened in the ETH. This was the outside edge in the ETH. And in Friday, this was a high volume area, similar to one of these that was too low. So we came back in the ETH and checked it. Too low. Is it still too low? Great question. Don't know. Not my job. Can I clear this? I got to clear this to go up. If I don't clear this, this trade will fail. That's all I know, and that's all I need to know. And now from here, I don't do anything because I can't. I have to let it play out. So either it's here, take a stop, and it's quite, from a risk-reward point of view, you see? Let's look at that for a moment. If I'm getting long in here, not a recommendation, call it 19 quarter. I'm all right. And my stop is here. It's around a 2.5 point risk, depending. If I have the discipline, I could be buying 1 tick above this. If I get above here, now I can start looking to what was too high. Here, and this is where I might go. Let's see the trade. And again, I don't call trades. This is the auction. And my stomach flips just like yours does. My mind goes, oh, that trade's going to fail. You're going to get stopped out. I did a recording, which we really ought to post in the Trader Lab, in the library of webinars. And all these resources, statistics, and the rest of it are available to everyone who visits the Trader Lab. There is no cost to join the Bookmap Discord Trader Lab community. It is a serious community. It's about the business of trading. It's not about the latest, only one thing you need, the secret thing you've never heard of. Leave that for the, I'm not going to say leave that. I'm just going to say, if you've been there and done that, maybe you don't want to keep doing that. Everybody's looking for the plug and play solution. So we have an ATM in the basement. Not so much. This is a business of probabilities, and risk management and randomness. It's really the idea of projecting the future. Oh, this trade's going to fail. You know, it might, because we got to clear this. We know that, right? And so far, I'm not clearing it. I've got my sellers, but what do I have here? I got my seller here, absorbed. Now what? If this seller here, if we can't get below this guy and we clear this guy, then we can extend up. That's what I know based on order flow. I don't know what will happen here. That's the joy. So what I'm seeing is buyers got absorbed. I'm getting sellers in front of this. More icebergs here. If the buyers can get through that seller and this seller, we can now extend up and I get over this guy. It's good for the long. But that's my resistance in a microstructure. So we'll see what it does, okay? I hope you're getting something out of this and that you find it interesting. If you have questions, please post them. And if you're visiting in YouTube, please support the stream and subscribe to the channel. Give a thumb up. And be sure to subscribe. Remember, there's no cost to be part of the Trader Lab community. And it's a serious community. It's not romper room. It's really about the business of trading. It's a career path, understanding this business. There's no shortcut. If you want to, this is like being a professional athlete or being a high-level performer in anything. Musician, dancer, surgeon, fighter pilot, you know, name it. Anything that requires a highly developed skill. You've got to put the time in, and you can learn and leverage if you're in the right environment with other traders. Our senior trader in Trader Lab has over 50 years under the belt. I'm going on 45. I think I have something to offer. That's why I agreed to do Trader Lab. The other thing is the Bookmap Discord community is just an amazing community. There's additional education available to everyone. Stocks, you know, large cap, small cap stocks, order flow with a high tier tool like Bookmap, crypto, market maker behavior. We need our buyers to continue above here. Let's see what we do. Order flow, crypto, market maker behavior, algorithmic behavior, and a lot more. All of this education is available. And there's another thing. If you're a Bookmap subscriber, remember, there's the Bookmap Academy. This is individual mentoring and coaching every Thursday for Bookmap subscribers. So, you know, and the other thing about Bookmap, you might wonder, do you need Bookmap? I'm going to say is you need the best tools you can get your hands on to create an edge. That's what you need. Should it be Bookmap? I looked at a lot of tools early on, and I thought I got Bookmap in 2015. It might have been 2012. I really don't remember. Shows you. It's all about edge. I could not read the dome. Never was my thing to be looking over here, see ads and pulls. This is where just something as simple as the heat map gives you an edge because you could see what was in the book and you can see where it is now. Now, this is an algo, so I'm kind of ignoring that. But what is important is resting liquidity. So if we can look up and down, we'll be able to see. Now, I've changed this so this is dull. But we can see where the liquidity gets added and pulled and a historical aspect of where it was. So right here, you can see what we've got here. We need to get above these sellers, and this was the last place right here, this high volume. So if I can get outside of this distribution, then my next high volume area is going to be here. I'm going to label that just in case we come back before taking a stop in our theoretical observational trade. Right? If this is too low, weren't you saying, oh, he's going to get stopped out? Just say, were you saying yes? He was going to get stopped out. Oh, Kyle, you're saying on the short, tough trade to hang on to? Yeah, they're all tough for me. Kyle, if I look at the NQ and I'm trading the ES, and by the way, I do look at the NQ. I don't trade the ES from the NQ. I trade the ES from the ES because it's the behavior of the participants in the product that I'm trading. Just like this. Suppose the NQ was going down and I have this. Am I trading the NQ? And I'm going to say what's that correlation? And the fact there is a correlation. Is that a reason I should be doing anything? Or should I be trading this? By the way, where's my outside edge? It's in here, this low volume area. Remember, so here's what can happen. If this is too high, I can come out into this low volume area and then rotate back here. Mean reversion. It's the same trade from wherever we got short. I can't remember when, right? 9 and change. So it's outside in. This may turn out being outside in, but here's the but. There's always maybe, right? This might be too low and this might be too low. If this is, look at the logic. If this is the retail price from the last auction, ETH, and this is Friday's highest volume, retail, so retail, and I come down and I exhaust and I have my absorption, then what? The sellers in this leg, potentially, who knows, are on the hook. Their stops are here. Where was the last area that was too high? It was here. If this is potentially too low, I have a couple things. I can come up here and that'll be the end of it and I'll rotate, or I'll squeeze out the sellers in here and go for the buy stops here and then maybe even here. So it's all fractal. Anyway, Kyle, I don't know if I hope I answered your question. And please give a thumb up in YouTube, guys. I know you're getting something from this and I should stay the course. If you have questions, please click the link in the bottom of YouTube. Go to the Bookmap Discord Trader Lab community. There's no cost to be part of that community, 24 hours, 7 days a week. Plus, there's additional support in there. We support each other, graphs, charts, synopsises, trade plans, and so much more. Statistics. Why are statistics important, by the way? That's why I had a target there and there for my short. Statistics. If I didn't understand statistics, why would I even know where I was trying to go or why I might take a trade? If I didn't understand market mechanics, why would I consider a long here? No matter the outcome, right? Because I understand statistics and I understand market mechanics. Is that a process that maybe you can extract an edge from? That's a question mark, by the way. The answer is within you. And that's what the Trader Lab is for, to help traders find an edge. The thing that's, I think, really becomes challenging for us, among other things, besides the psychology, which is beyond anything most retail traders ever get to understand because they focus on setups and tweaking and tuning and curve fitting, is psychology. We're still getting absorption here. So that's a little rough. So I need buyers to come back in here, but they are getting absorbed. This is kind of on shaky ground, but that doesn't mean they're all on shaky ground. Until we come under here, this trade doesn't fail. So remember, if you're long here, your goal is to cover the risk from wherever you enter, call it 19, whatever, and your stop is around 17. Call it 2.5 points. So if you're in at 19, you need to get up to around 22, 21.5 to scale to get risk neutral. And then either you're going to take a stop or you're going to scale, and then you're going to manage your trade to there or up to here. So we'll see. And maybe up to here. So we'll see what it does. It might take a month for it to ferment. But this is trading. You put the trade on, subject to your plan. You fasten your seatbelt. You manage your mentality. Because what happens to us when we're in a trade? Oh, it looks good. Oh my God, I'm going to get stopped out. Oh, it's looking better. Oh my God, it's counter rotate, right? Is this what you're going through? What is that? That's your primal wiring. What does that have to do with the trade? Nothing. Do you move your stop up here because you think this is going to stop you out? Do you move your stop here because you're micromanaging and then it rotates and maybe it fails? What is the right thing to do? Do you know the answer? If you don't know the answer, then you're creating randomness in a random environment. You cannot measure random inputs. You need anchored inputs. In fact, the link in the bottom of YouTube will bring you to Trader Lab and there's no cost. Watch the primer webinar. It's got, I think, about 29,000 views. And remember, Trader Lab is not, I'm not out there in the ozone, none of this TikTok, Instagram, none of zero. There's, quote, no advertising. This is word of mouth. In fact, if you know other traders who you think would appreciate Trader Lab and maybe developing trade plans and developing the business of trading, let them know. Be sure to subscribe. Tell your friends. Tell everybody who you think would appreciate the business of trading and learning the business. And that's not a guarantee anybody will succeed. Of course not. But I can guarantee you'll get the straight oil from the can in the Trader Lab. And then it's up to you to find where your edge is. I was starting to say one of the more difficult aspects of this is deciding what's your trade. Is it from here to here? Is it from there to there? Is it to the stops that are sitting at VWAP in mid? Is this your scale up here because this is the last area it was too high? We also just might come up here. This might be your scale. Outside edge, low volume area. This is where the outside is. This is where the stops are. What is your plan? If you're in Trader Lab, you know the answer or you're developing it. Does this make sense? You guys get some out of this? Kyle, that's fine. It's edge though. Yeah, why? It's some Cocobolo. By the way, you getting a lot of rain in Nicaragua? I know you get a lot of humidity. I'm getting a question from Cocobolo. Why does the heat map look similar to when the contract's about to expire? This is a bracketing algo, and it just came in, I guess, a week or so ago. I think it's somebody testing out their algo because it doesn't trade. It just brackets. It turns on at 7 a.m. Central Time, and it turns off like 30 seconds before the news. It just looks like it's a regular old-fashioned algo, and it creates noise. You can see how it brackets, the bracketing algo. So I don't know why it's there. It doesn't trade, so I just think it's following the market around, and it's maybe on a shakedown cruise. So remember what it right here is. This is where the sellers took over, and these buyers got trapped. Here's the high volume. So out here, so remember, we would be scaled, I believe. I'm still seeing the absorption. What we want to see is the buyers continue to absorb. 19, 20, 21, 22. You'd be scaled. So now what would happen is you'd have your stop, and if it comes down and fails, so you would stop out and you'd scratch. And this is when I say your broker sends you a gift basket. Otherwise, you're just sitting in the trade looking for this and this. That's all there is to this. And now you just sit. Unless, here's the unless, you are a, quote, scalper, because then you're in these micro fractals. I don't trade these. They don't pay for me. But I use a scalping process for triggering. In other words, every trade starts out kind of like a scalp because it triggers a scalping process. This trigger, I mean, you might just be trading, here to where, what, this last little fractal here, right there, that's microstructure. You see the volume? You could just be going there. I can't trade this. in the past, now in the NQ, it's a little different. But in ES, I need the range. So I have to be patient, and I have to pull the lens out and go for higher. I don't like to use higher time frame because time isn't part of it. But the structure here, you see how we fell out? So I know this is too high. I know that if I come back here, these sellers may defend this position, or they're going to get pushed out and we're going to take the stops here. That's what I know about this trade. That's all I know about it. So if I'm long, I got to get risk neutral, and then I'm either going to scratch or I'm going to come up here. If I come out over here, I'm going for these guys. And this, the IB, first hour's low. Is this making some sense? Not predicting what'll happen, not blessed with that, but what might happen. And then, as they say, act accordingly. Trade management, risk management, get risk neutral, requires a minimum 2-lot configuration. The job of the first contract is to buy the stop on the runner. It helps you. Why? Why would you do not only a 1-lot, but maybe a 2? Why would Tom say that? Because you need to know that if you risk 3 points on a trade, on a 2-lot, that means 3 points each, 6 points, that, and you could trade micros, you could cut it down. You don't have to trade the minis when you're starting out. You can, if you risk 3, you need to get 3. Then you don't have to move your stop. The worst that happens is you break even. What is the probability if you have a structured trade and let's use 3 points? What's your percent probability to get a 3-point scale before taking a 3-point stop on a 2-lot? If it's better than 50-50 and hopefully higher, you have an edge. Now you develop confidence because you're removing yourself from what other retail traders do. You're taking randomness, which exists, and uncertainty, which exists, and you're creating probabilities. It's now tangible. That's a probability. It is on paper. It's in your trade plan. This is what we do in the Trader Lab. And it says under this X condition with these fixed inputs in this condition, you have X% probability that if you get long here, that you're going to get risk neutral. If you get risk neutral, now you have no risk, and you can now take that airline sickness bag and put it back in the seat because your emotions, and you now have better control of yourself and your fear. The fear doesn't mean you're a coward. The fear is primal wiring for survival. You got to understand what the fear is. You also need to understand when you make a promise to yourself that you're not going to bail out, you're not going to move your stop, and all the other promises you make, yet in the moment, you're not conscious of it, and you do things that are not in your best interest. I hope you come to Trader Lab so you can understand what that's all about. It has nothing to do with your intention. It has to do with your wiring and the reptilian brain, the limbic system, the fight and flight mechanism. It is beyond what you think it is. And you really need to come to Trader Lab so you can learn about these mechanisms. The thing that will keep you and take you out of the trading business, no matter how much time you put in and how much work you do, is your psychology, not understanding it. And even when you understand it, it doesn't even mean you can manage it, but it's a step forward. I did about an hour and a half talk on it over the 4th of July weekend, I think it was, or I think Wednesday, the Wednesday before 4th of July. And that is available to all of you who visit the Trader Lab. It was recorded, and thank you, Trader Lab, for recording it. I do ad hoc audio updates, talks, psychology, reviews, a lot of different things outside of this stream. And there's a lot of added value. And I think when I talk about value, since there's no cost to be part of the Bookmap Discord Trader Lab, I don't know how you equate value except to say, if this is something that you find interesting, the methodology and this process of understanding with no indicators, then that is something you might want to explore. It's up to you, of course. But I suspect this will require you to change your belief system. I believed for years that I was doing the right thing. It was just persistence. I coined a phrase called Trader Groundhog Day because I would wake up doing the same things and just think it was tweaking, tuning, improving, fixing. Be persistent, keep a positive attitude. Look how much it works. You just got to make it better. And what I figured out, unfortunately, after too many years, was random behaviors have winning trades, but trades that don't have an edge win also. That's the fallacy of belief and Trader Groundhog Day. So this trade right here, this is a long in the Trader Lab if it's part of your vetted structured trade plan. We got to get past this, then this, then this. This is the trade. So what you would have in this is the long scale potentially. Stop here. You could move it a little bit. If it comes back under here, it's going to take this out. And you can see this trade developing. If this is not fast enough or slick enough, then, you know, this is just trading. I don't know what to tell you. The market, the thing to understand about this process that I'm sharing, it doesn't, the auction is a behavior that we see consistently. The outcome is always random. The range is a variable. If this had 20 points in it, it becomes a 20-point trade. Right now, this has about, 5 points in it, plus the scale. So then it's trade management. My stop does not go here. Why? Easy to get popped because that's what retail traders do. My stop has to be away from the noise. I want this, of course, to keep going. I don't know when the sellers will hit it or the buyers will exhaust and will rotate into these stops. If I know I cannot know, then I'm willing to take a scratch on the trade or a tick or two or whatever comes out of it and go on to the next trade. Because the only way in my time frame, in my plan, that I get paid is to sit through these rotations because the payday comes from the larger rotation. Just like the short I took into this target was a bigger rotation. Does that make sense? Jim, they're not always saved. Tomas, the only way Trader Lab is just through the link in the bottom of YouTube. And guys, if you're in YouTube, please give a thumb up and subscribe to the channel so you can get notifications of, what's going on. This is Trader Lab, guys, and you may find it maybe you want to yawn and take a nap, eat a donut and go into a sugar coma. But basically, this is what we're doing in the Trader Lab. This is what traders are doing in Trader Lab. Now, I'm going to ask you, if you're using indicators, does your indicator tell you to be short? Does your indicator tell you to get long here? Or is it telling you to get long here? Or is it not? I don't know what it's telling you. I don't use them. But what I'm saying is, how would Trader Lab participants whose plan suggested to get short here to here, did your plan have that in it? Did your plan also suggest to get long here to come back up, maybe to here, here, and that you don't know. But this outside edge right here, this is where, because we fell out of this structure. I'm going to draw a little box around so you can see it. Got to draw more boxes for you guys. I don't think this is complicated. What it is different. And it's only different from what you've grown up on. We all buy at some point in our careers a toolbox, trading toolbox. Oh, it's got indicators. It can draw a trend line. It's got moving average. It's got all these wonderful things. This is the low volume edge right here. So this is where I'm looking for it to come. You would be well scaled, risk neutral, even if you're late entry. And if you're in Trader Lab, this is an area that we could come back and auction and then either continue down or push through to here and then squeeze out these guys. That's the trade. final questions. I got about 5 minutes. And please give a thumb up. It really helps the stream. And be sure to let your friends, other trading buddies, wherever you're hanging out, let them know about Trader Lab. There's no cost to it. It's a 24-hour, 7-day community. And it is made up of serious traders. And it's really about business. If you're interested in the business of trading, Trader Lab might be the best place you can visit. Not to mention all the additional no-cost education that Trader Lab offers or can give you access to: stocks, options, crypto, swing trading, market maker behavior, options, algorithmic behavior, order flow, of course. And don't forget the Bookmap Academy. If you have Bookmap, you subscribe to Bookmap, there's no cost for mentoring, one-on-one mentoring and coaching, not to mention all the resources of the other streamers that are available in the Discord server. All I can say is I wish when I started trading that there was something like this. When I started, there was nada. You bought a book, you went and paid a horrendous amount of money to a seminar. I certainly did that. And I have to tell you, I wish I would have stayed home when it comes to flying to another city, staying in a hotel, sitting in a 2-day seminar, and coming back with something that looks like a little candle that has I can't remember what it was, but it was like this really wonderful thing, and all the little things. Oh, this is the best thing that ever happened, and no, changed my life, and yeah, it's all, well, you know what it is. Thumb up in YouTube. This is the long, and I don't call trades. I hope you're getting something out of this. If you'd like to understand what this is, why it is happening, and why I don't use indicators, and I'm not saying you can't, remember, what is an indicator? It's an output of a derivative of price. What is the auction? It is what creates the behavior of price. The purpose of the market is figuring out what's too low, maybe, and it's only the maybe, and what's too high. Last place it was too high. And let's go one little spot further. If the shorts are in the market, where's their stops? Here, here, and what was too high? Here. So the possibility exists we're going to come up in either to here and counter rotate right about where it is, here and check it and bounce off, or, why am I saying it might do this, it might do this? That's the facts. It might. Not it will. It might. Trading, it might. What will it do? I'll let you know after it does it, because that's the best we have. Hindsight is 2020. Fortune telling, wrong business. Randomness only. Please give a thumb up in YouTube. Let me show you what these PDFs look like. There's 60 of these you can download if you click the link in the bottom of YouTube. If you haven't visited the Bookmap Discord Trader Lab, I'm going to show these, and then we're going to come right back to Bookmap and take a look at things. This is what they look like. You can see there's a fair amount of description. I'm not a vendor. There's no course. Nobody's going to send you a bill. It doesn't work that way. But you can see here, these are actual trades. It was live trades. And these are just things I just kind of did ad hoc. I was never intending to stream. It was not on my list of to do. I'm just a trader, sits out here in the ozone. And it is not black and white plug and play. You actually got to learn how the market works. Quite different. It isn't just the right mix of indicators. Order flow, this is a live trade I had. Bracketing algo, change behavior, I exited, market exploded it up. Order flow, this can help you. And there's a lot of these. So you can download these. But the most important thing is come to Trader Lab. More live trades, I think, yeah. And you can get this and a lot more. Please give a thumb up in YouTube. Subscribe to the channel if you want to receive notifications on events, special events. By the way, don't forget, if you subscribe to Bookmap, I wonder why I'm getting the wrong thing. Okay. If you subscribe to Bookmap, there's the Bookmap Trader Lab and which you don't have to be a subscriber to Bookmap for, but if you subscribe to Bookmap, the Bookmap Academy gives you tutoring, mentoring, one-on-one coaching. I don't know any other provider of software, especially a high-tier tool like Bookmap, anything, anyone out there that will give you one-on-one to help you develop. So you can have your trade plan out there. You could show your trades. They can be reviewed by other traders. You get input and feedback. This is unique. I don't know anywhere else in the industry that this is happening, but that is what happens in the Bookmap Discord server, and the Trader Lab is here for you. Please give a thumb up in YouTube, subscribe to the channel, keep an eye on this trade. I think we're hitting our resistance up here at the moment, that micro high volume structure, which I think in that LVN area, right out around 23, that is our resistance. Now we can rotate back down to the micro high volume around 20. Now you just watch it. Thanks again, guys. Appreciate you being here. Thanks for being part of Trader Lab. Remember, these streams are available exclusively to Bookmap Discord Trader Lab participants for 24 hours to review, screenshot, and check them against your trades today. Let's all work together so we can all trade better. Thanks again. Look forward to seeing you tomorrow.